Hey everyone, thanks for tuning in. So, tech sector is looking pretty darn weak. It's actually looking very weak. And we first talked about buying this SOXS, this inverse ETF, which is designed to go in the opposite direction of the semiconductors, but by 3 times as much. So it's an inverse leveraged ETF. And we first talked about this. Well, actually, we've been talking about it for a while, but I think the last time I wrote about it and recommended buying it was on April 10th. So as you can see, it's up about 40% since then. And I know some of you are options traders. I know you've done very well. So that's really cool. I think we're going to be going even higher here because I think this tech stocks are going lower. And let's just go take a look at this, the tech sector. So this is the ETF, the Spider ETF that tracks the sector. And as you can see, we've gotten to this important point here. Now, it's not a coincidence that this is where this sell-off stopped. Get rid of this here. There tends to be support at levels that had been resistance in the past. And notice how that's exactly what happened here. There are people who sold back here who thought they did the right thing when the price went lower, but then it went higher. And a lot of the people who sold now came to think that they made a mistake. And they tell themselves, hey, if I could buy my shares back at break even, I'm going to. Well, I mean, I should say, if I could buy my shares back at the same price I sold them at, I'm going to. So you get these remorseful sellers placing buy orders at the level that was resistance. And if there's enough, it can turn it into support. It's a very common thing in markets. You can see down here, resistance becomes support. Resistance here became support here. So very common thing. So there might be a little bit of a bounce now because support levels are levels where there is a large group of buyers. And sometimes some of the buyers start to sense that there's other buyers, which is why the price isn't going any lower. And they start to worry that they get to miss out. They're going to miss out. Now, like back in my institutional trading days, say I had a big order on this stock. It trades 6.7 million shares a day. So just say I had to buy 500,000 shares and I come into the market and it's trading at 192. And then I see someone bid 192 and a half. And then I'm like, I don't want to miss out. So I'm going to have to go up to 192.60. Maybe that other person sees me and they get ahead of me. So you get these bidding wars coming off of these support levels. Now, most crucial thing to watch, if there's one thing to watch this week, last week it was Apple, which we talked about, but is this Microsoft. Now here is another dynamic of sellers, the dynamic of seller's remorse manifested in a different way. It keeps support levels intact. So we have people who sold at support and then the price bounces, and a lot of the people who sold regret their decision to do so. And they say, I made a mistake. If I could buy my shares back at the same price, I'm going to. So seller's remorse turns resistance into support. Seller's remorse can also keep support intact. So Microsoft, I think about 2% of the S&P, its biggest position. I suspect we'll get a little bit of a bounce, but if it breaks down, and I do think it's going to break down. I'm just saying we might be due for a little bounce before we start to go lower. So if this 400 level starts to give way, that could bring the whole broad market down. Now let's go through some of these other guys here. So Apple, this is the support that we talked about last week. When this support broke on Thursday, that really got the sell-off kind of underway. And you can see the same phenomena here, support at a former support level. Well, now the support is broken, meaning price is below it. What does this tell us? Well, it tells us that the people who created the support with their buy orders are out of the market. So maybe they canceled, maybe they finished. Either way, they're out of the way. So now if sellers come in, they're going to have a hard time finding buyers. And as a result, they're going to have to push the price lower to get in buyers off of the sidelines. And that could push us into a downtrend. All right. NVIDIA as well. It broke support. See that big move lower there. You could talk about future earnings and how great AI is and blah, blah, blah until the sun sets or the chicken comes home or the cows come home. Well, you know what I'm saying. One of those old expressions. You could talk about it all you want. But here's what happens. If everyone who wants to buy in, say, NVIDIA has bought it, well, there's no one left to buy it. And if there's no one left to buy it, the price can't go any higher. So markets go down when they run out of buyers, because some of the buyers look around and say, hey, I bought this stock and it's not going up. This is not the way I thought it was going to be here. So I better bail out of this before I end up losing money. And then they have a hard time finding buyers. So they have to knock the price down. So charting and markets are all about psychology and supply and demand. Don't get caught up in all this crazy Gann theory, Elliott wave stuff. That's all science fiction. Real traders pay attention to supply and demand, at least in the institutional world where I was for 25 years. That's what we did. All right. Now, some of these other things are really just kind of falling apart here. Let's go look at semis. I'm going to look at the semiconductor ETF, SMH, and this will give us a list of the companies that are in it. Okay, so we looked at NVIDIA. Next up is Taiwan Semi. And you're going to be kind of shocked at how some of these things are in like a free fall. Gapping down here. Broadcom. I mean, look at that. So this could be on the verge of breaking the support here. ASML. There's another free fall. This guy's at support as well. So if these support levels start to simultaneously break, then the floodgates could really kind of open up and we could get another big move down. Texas Instruments and Qualcomm. Yeah, I mean, look at that. And what's kind of funny is if you listen to the media, which I generally don't, but I was just curious as to see. Here's another example where we got support at a level that has previously been resistance. You would think that this would be getting more attention, but I guess it just hasn't gotten there yet. This Micron looks really interesting for a trading idea here because we're just above a gap. You know the expression gaps refill? Well, we see that we get support sometimes at former resistance levels. All right, just like we've been talking about. You can even see it down here. Resistance becomes support. All right. Well, when you gap through price levels, meaning we closed here and opened the next day here, there was no trading in between. If there's no trading, there's no one who sold the stock who's going to be trying to buy it back. So a lot of times, if you gap through price levels, spend some time trading, and then eventually come back to the gap coming the other way, you gap right back through it. So this would be a good idea to buy puts over here if this sell-off starts to pick up steam. All right, LRCX, AMAT. I mean, look at that. These guys are in like free fall. It's just amazing though. It's not really getting the attention, but I know that those of you who listen to me, I mean, we've been talking about this for a couple of weeks now. All right, so anyway, going back to the SOSX. I mean, there might, like we saw, if Microsoft may bounce a little bit, and that could put a little bit of a floor under the market, but I don't think it's going to be anything substantial. There's just too much going on. I mean, there's really at this point little, if any, chance that the Fed is going to cut rates. You got pretty much what could be the beginning of World War III starting over there in the Middle East. The government is like $5 trillion in debt now, and you got inflation is just like cramping everyone's style, man. It's like this place where I get a grilled chicken salad. Like last summer, it was like $15. It's like $23 now. So anyway, all right. Well, on that happy note, thanks everybody, and I will see you during the week. And if you want something else to keep an eye on too, which I think is really important to watch here, is what's going on over the financial sector. Because if it wasn't for this little move higher here, well, for this is actually a big move. If it wasn't for this move higher on Friday, the market would really start to come apart. And I suspect that that's what's going to happen. You see the S&P broke this support down around the $500 level. Okay, everybody. Thank you. And I will see you soon.